I'm Phil Russo, CEO of Toubani Resources. Our project is the Kobada Gold Project in southern Mali. It's 3.1 million ounces with a DFS of 100,000 ounces a year for 10 years.
Phil, hello. Well, this story's not new to us, but you are. Where have you come from?
Oh, I joined about 3 or 4 weeks ago, thanks, Matt. Before that was with Perseus in corporate development and capital markets, and then a stint at Dacian Gold, and then a longer stint as a mining analyst in Toronto, and even longer stint in project development with Barrick Gold. So, yeah, 20 years or so of experience has brought me to here.
Right. So we've spoken to Danny a few times. It was a story which he kind of walked into, had to clean up the kind of Forest Manhattan component. That's all gone, parked up. I think I sort of sense from Danny's sort of deep frustration of the fact that there's a sort of legacy view of the company because of that, despite having, as you say, 100,000 ounces a year, 10-year profile, which most companies would be, die for. It's exciting, but he's changed things up. So you're on the ASX now. You've stepped in as CEO. So what's he charged you with doing?
Yeah, look, it's a new lease of life here. Like, the asset was clearly unloved for reasons I couldn't put my finger on before joining, which is, I guess that's the reason why I'm here. I'm excited about what's ahead. The listing in Australia was the right call. And so new management team has joined. Danny just stepped down as sort of executive chair. In a few months, he'll be chair. And so I came on 3 weeks ago. I brought my technical team with me.
From where?
They're Perth-based as well. They got strong West African experience. They were working in the Marilla gold mine just before. The two fellas, actually, Bill Oliver, Kerry Griffin, one's leading the exploration and one's leading the resource development, and which is perfect for Kobada. It's got strong exploration upside here, but we've also got a large asset. And so we're going to be going through both those things in parallel.
Okay, so we've reminded people about the size of the asset and the potential in terms of the ounces. But you're starting from such a low base. Is that an advantage or a disadvantage? I'm talking about in terms of valuation.
Yeah, well, on valuation, and that's not the ultimate question I asked myself before joining, is it should be upside from here. Like, where's the downside? The market is pricing you like you have no ounces, but really you have 3.1 million ounces. And so part of the strategy here is building that familiarity, educating the market on the size of the prize that is Kobada. And so, I keep reminding myself, having walked the ground last week, is we've got a single open pit that's 4.5 kilometers long. That's hard to find in the world.
Yeah, well, it is, but I think there has been a Mali discount too. Okay, but given the amount of M&A in country and given some of the names in country mining and producing gold, I think people have perhaps got over that hump a bit. But for you guys, what else are you hearing? You must have done some diligence where you walked in here, right? What are the concerns? What are the things that you've got to overcome?
The things that we got to overcome, they're good questions. But I'm back to basics here, right? When your market cap is $15 million Australian dollars, you've got to step back. We can't be rushing this into development because our market cap won't support that. But what we can do is, can we make this project even better than what it is advertised as today? So it's got a good base case, but there's some low-hanging fruit right in front of us that can give us a bit of momentum.
Give me them. What have we got?
Well, it's the exploration side. So,
do you need more ounces at this point?
So this is where, if we go back to the pit and you start to show people that we've got a large pit that's got a high-grade component in there. And at the moment, we've got a big pit that's going down deep. It's pulling the sulfides in. If we find more oxides on these other structures, maybe that pit doesn't have to be as deep. Maybe that'll improve my economics, lower my strip ratio, improve my costs.
That's what you're trying to do.
And so, it's about, to me, I've got a project, the next guy's got a project. How do I get my project to rise to the top? And so 100,000 ounces a year is great, but is there something right in front of us that we can make that just that little bit bigger, a little bit more simpler, lower technical risk type of project, Mali discount notwithstanding?
but it's about margin, right? So 100,000 ounces a year. Not all 100,000 ounces are born equal, right? You've got to have a margin in there, and you've got to make money in that, and you're obviously going to try not to plow all of that back into the ground. So the exploration bit, I get, you're going after kind of higher grade and oxides rather than the sort of deeper sulfides. Makes a lot of sense. What else are you overcoming? Because it can't just be, we're going to fix this through the drill bit. There's a bunch of moving parts already in place that need fixing, surely.
Yeah, look, it's I've got to be marketing really hard the next 6 months. Like,
okay. So you think it's just storytelling is a big bit of it?
Storytelling. Like,
right.
I think it's breaking down the perception of Kobada as a low grade big asset.
Yeah.
That for whatever reason.
Well, that's in the UK, but for the Aussies, it's brand new, isn't it?
So it's two prongs. So I'm going to be doing that outside of the Australian shores, but in Australia, which is probably why I'm most excited, is I've got a clean company, 100 million shares out, good supportive shareholders, and an investor base that hasn't heard this story. Right. So I'm excited. The new presentation, our new strategy's only come out this week. I'm excited to start to talk about that in the country because I think I've got a story that's differentiating. Okay,
I'm going easy on it because you've been here for 4 weeks. but do you know? But there's a heck of a lot to do. I agree with you. Telling the story is really exciting. To a new audience, which is super exciting. From a low base, that's super exciting. But you've actually got to deliver on that. So have you got the cash to be able to do some of the things that you want to do?
Yep. Yeah. So part of our drill program strategy is we're not going to drill deep holes. We're going to drill shallower holes. We're going to space them out more.
Like
we're trying to get
shallow being what?
100 meters.
Cost of that is what?
For us to drill is about 150 meters a hole, everything included.
$150. Oh, right.
Dollars.
And that, and how many meters are we looking for?
Well, we've got about 7,000 meters of a 10,000 meter program going. I've had a few thousand meters already going on. So the strategy, the drill program began on the southern extent of the property, but myself and the team coming in, we've pivoted that strategy. We're in a hurry to get to these other structures where we don't have resources. So I want to step this out 6 or 7 kilometres of strike extent with really basically untouched in terms of artisanal activities there, but no holes below it.
Right.
So if we can get a sniff there, it feels a bit like game on.
Okay, so you've obviously modeled this from historic data and you're adding to it with the new drill bit. So how do you maximize your chance of being efficient through the drill bit and giving you the kinds of ounces that you're looking for to allow this kind of 100,000 ounce a year story to actually stand up economically?
Well, I guess exploration is always risky, but a bunch of artisanal miners historically sort of can't be wrong. They wouldn't be there unless there was a good indicator. And so what's new to the story that wasn't there before is the artisanal activity, and they're no longer on the property. But years ago, they were bigger than I had anticipated on these other structures. So Russo structure, the Kobada S structure, we've got similar levels of artisanal activity chasing this mineralisation there, but I've got no holes below that. And so this is a big system. Yeah. And so good place to start is where these artisanal guys have been active.
Right. Okay. And tell me, I'm going to bounce around a bit because it's kind of an interesting position you find yourselves in. There's some opportunities, and there's still a bit of residual problem solving, such as the legacy shareholders. They haven't had a good ride of it, right? Not your fault, not the asset's fault, quite frankly, either. But nevertheless, they're there, and that's a kind of overhang for you. So come back to storytelling, I guess. You're going to have to say to them what? How do you encourage them not to dump stock as soon as it hits a certain number?
Well, I encourage them to hold on here, but
how? You're an analyst. You know what it takes over.
Well, look, when you're trading when you're trading like there's no ounces in the ground, but with some bit of success in the near term here that I can't say it's going to hit gold, but I'm confident we're going to find some more ounces here, and a re-education of the market in terms of the potential of Kobada. I don't expect us to be trading at $5 an ounce when my peers are at $30 an ounce. That's my first goal, is to get it to $30 an ounce. They're trading that on that with less than what we have. And so the question I always ask before joining is there a technical reason why that's happened? And I can't put my finger on that. So there isn't one.
But you've looked and you can't, or you haven't
I've
done
looked. No, I've looked and I can't. There isn't one.
Okay.
There isn't one. And so if the other reasons for keeping this stock where it is have dissipated, which is where we find ourselves today, with a clean company and good institutional shareholders following the ASX listing last year. You know, I'm pretty invigorated about the pathway forward in terms of breaking it down and getting the value to move.
Well, I think that's good. I think the enthusiasm with a new team is good, and if you diligence that before you kind of walked in here, this isn't. I mean, how much money have you put in yourself?
Let's put it this way. At the moment, my compensation structure is I don't really win until the stock's $1 or $1.20, and so we're 20 cents today.
Okay, you're properly incentivized.
So, you know, the board's got a big dream and vision on this asset, and you know, I've come on board because I share that vision, and so I've been incentivized accordingly. Right. But I'm certainly not going to do well here unless this stock is sort of 4 or 5 times higher.
And let's look at the incentive programs. So it's important for the Aussie stuff. So we've seen a few train wrecks along the way, which is right. Okay, it's got to hit X dollars, but at the same time, you shouldn't be incentivized to say whatever it takes to get it at X dollars, because it'll come straight off again. And in terms of deliverables, what have you got to deliver as part of this compensation package? That's a better question.
For me, for us to get the outcome we're looking for with Kobada, we can't be cutting corners or doing things, you know, I don't know what the word is there, but, you know, doing things inefficiently or, you know, not per the book. So this asset's got to withstand scrutiny in the market. It's got to withstand scrutiny for investors, for corporates, or whoever. And if you do things the right way along the way from this point forward, then it will increase the likelihood that we're going to have the outcome we want. And that, what I'm talking about, is we're going to ultimately position the asset to be built. But if we get a knock on the door, we'll always talk to them and see where we're at, see if there's a deal that makes my shareholders money. But, you know, we're going to prepare this asset as solidly as we can on the great work of the DFS that was completed, you know, just a year or so ago. We're going to build on that and position this asset to be a gold mine, because that ultimately, if we're going to make anyone money, is this an orphaned asset that can't do anything, or is this a standalone project? Right. I think it is a standalone
because your problem isn't gold price at the moment. That's doing a lot of heavy lifting for you, right? So that's good news, feeding into that kind of environment. Your problem is 100% around how the hell do I get this thing financed in terms of the equity component without diluting the heck out of the shareholders, right? So how are you focusing on that? Do you want to do the drilling first and understand, can you get some more ounces in there or more economic ounces in there before you have those conversations, or has that started?
So it gets back to where we started in terms of why am I looking for oxide ounces? And that is, I've got a sulfide component in my 1.2 million ounces of reserves.
And manage the breakdown?
So there's 900,000 ounces of oxide, 300,000 ounces of sulfide.
That's the way around you want it.
So that's good, right? But I've also got 700,000 ounces of oxide sitting outside that reserve. So I want to bring in as well. But that's the second leg to the strategy. I want to find new oxides.
Are they nearby?
They'll be mostly within the pit. They're mostly within the pit, but they're inferred. The strategy is two-pronged. I want to find new oxides, near surface, shallow drilling. I want to find new oxides on new systems, new structures, and I want to bring in those oxides that are outside that reserve. And if we can create a really solid 10+ year, technically simple oxide project that's pushing 150,000 ounces a year, it's going to be irresistible to the corporates.
Cheap CapEx,
and cheap
high margin.
We're talking $250 million. Aussie on the last study. What was that? 170 US a year ago. But that's not like I'm talking $1 billion capital or 600 mil capital. That's a lot of that. We got a more modest capital program to monetize this asset.
Right. Okay. And you've said that this is a district, which is the bane of all explorers. it's massive opportunity, but massive cost, therefore potentially massive liability to be able to try and extract the value from that. Do you, as a business, focus on this? Let's get the inferred into indicated. Let's find a few more oxide ounces to add to that thing, and then we go, right, we've got a higher margin project which we can try and capitalize and try and get into cash flow, and then we'll worry about the district? Or would you do what a lot of North Americans do, is say, oh, we're going to drill to the edge of the envelope?
See, there's a couple of things there. You don't need a lot of money here to know the extent of the whale that is the Kobada Gold project. Like near surface, shallow drilling, 100-meter deep, you can bang those holes out for not a lot of dollars, right? And to me, all the things we're talking about is about positioning the project so it can be fundable in the market. When that day comes, I think there would be support if you can break down the obstacles for funding a project. It's got complex metallurgy. Is it, do you need multiple stages of crushing up front, high capex? Those things aren't here, and so it's about simplifying this as much as we can. And when we simplify it, we're also going to improve the economics, because, like I talked about as well, Kobada's got grade in there. If I've got other sources, I can stage the way I'm mining these things. I can make that payback improved. Instead of 2 and a little bit years, it could be strengthened from there. I can remove the sulfide capital in the later years. Like, there's things to do, low-hanging fruit. And if I'm mining soft ore and I'm processing soft ore, my costs are going to be pretty stable, and so those margins are going to be there. Sub $1,000 US costs. Okay,
so we're clear on the strategy that you want to employ to kind of reveal that value, and the bit of theory about how we do it. So, as far as you're concerned, what are the realities of what you're going to be able to deliver this year? Can you deliver the additional oxide ounces? Can you bring the inferred into indicated this year? I'm trying to give people a sense of timing, how quickly this goes, because it's been sat doing nothing for so long, right?
Give us a bit of time, but the success with the drill pit will dictate when we get back to an upgrade of the resource. Investors should be looking for, when we put out results on these other shears, so Gosso and Kobada East, but also Kobada North. We've got multiple kilometres of strike extent with artisanals on there, but no drilling. That's what I would look to over the coming months, in terms of the results there, to know whether we're onto something. And then after that, we'll reassess about what drilling we need to do to start bringing these things into resources. So we're not going over there to try and find 50,000 ounces incremental on 3.1. I'm trying to see if there's a material change in ounces available to us and the oxides on these other structures.
Brilliant. Well, look, good luck to you. Great news. Well, I'm going to call it a news story. It is a news story.
It is a news story. Okay? It's a new company name and new board and management team. And so, we're pretty excited about where we're going.